Hello guys, if you're a first-time home buyer in Singapore and just starting to consider your options, make sure to check this guide out. You'll find out what are the property types and their respective eligibility conditions, which of them could be a better choice for you as a first-time home buyer. First, the property types and eligibility. To buy a HDB, you have to pass through the eligibility check, which you can do right now for free at HDB website. I'll leave the link down below. If you're not eligible for HDB, you can skip to the EC or Condo portion in the video. Alright, so for HDB, you have new HDB flats which are bought directly from HDB and resale HDB flats which are already built up and they are individuals who are looking to sell in the open market. There are grants for both new and resale flats, and it also depends on your own eligibility. You can check out the grants video here. For new flats, there's BTO, sale of balance flat, and also open booking. For BTO, sale of balance flat, you need to ballot to get a queue number in order for you to select a flat. It's like a lucky draw. If your queue number exceeds the number of flats, chances are you won't be able to book a flat. And every year you have 4 BTO launches to try. Usually it happens on February, May, August, and November. Sale of balance flats are flats that are going to be finished building or have already completed. They are usually launched in May and November. And you can only apply either BTO or sale of balance flat during the same launch. For open booking, it is first come first served, and you can find the units right on HDB website. Usually most Singaporeans' first choice will go for HDB new flats, and most of the time I would agree due to it being new as well as being the lowest price point you can get on the market. However, there are a few questions you have to ask yourself. Number one, are you able to wait for the ballot success as well as the construction time? And secondly, are you okay to fulfill the minimum occupation period of 5 years and 10 years for PLH schemes? Do note, you cannot buy any private properties within the MOP. And number 3, do you have specific criteria that you must have for your own home? Like you must stay on the top floor, you must have unblocked facing, etc. etc. If you're planning to stay in a forever home and you get a good queue number that allows you to choose that forever home, congratulations. On the other hand, if you're intending to use your first purchase as a stepping stone for a bigger home next time, do also consider the PLH limitations like subsidy recovery. Upon selling the flat, you must return a percentage of the resale price to HDB, and you can only rent out spare rooms but cannot rent out the whole flat even after fulfilling the MOP. Your future buyers must also meet the same eligibility conditions to buy the PLH flat, meaning they also have the income ceiling cap as well as restricted profile, so your buyer pool will be smaller compared to normal resale HDB. If you're looking to move in within 5 to 7 years, you can try for BTO. If you need to move in quicker, within 1 to 2 years time, you can try your hand at sale balance flat or open booking flats. If you absolutely need to get a home fast, resale HDB flat will be your best bet. For resale HDB, you can engage a great real estate agent to share with you what's available on the market that suits your criteria and your budget and help you find your home, negotiate the best price and terms for you, which can potentially save you 4 to 5 digits, guide you through the whole process, saving you headaches and confusion, and help you purchase your home. Usually within 3 to 6 months, you can get the keys. Next, for ECs, aka executive condos. For EC, we'll be referring to brand new ECs which are bought directly from developers with eligibility conditions from HDB. So if your income exceeds 16,000, you can go for HDB resale or resale EC or even condo instead. There are times if your income exceeds just by a little bit, HDB may allow appeals on case-by-case basis. And EC is a condo development that has full facilities, and the land is sold by our government to developers at a subsidized rate. After 5 years of completion, TOP, the EC becomes semi-privatized, where Singaporeans and Singapore PR above 21 of age can buy. From the 11th year onwards, it becomes fully privatized and treated as a private property where you can sell to foreigners as well. And fun fact, based on data, most of our foreign buyers of ECs are from China, India and Malaysia. If you want to enjoy condo facilities as well as the lifestyle, you are able to ballot and wait, and you can afford it comfortably, do consider go for EC, especially if you're thinking of using it as your stepping stone. We can see that for the launches in the past 10 years, BTO's ROI is actually higher compared to ECs. Though we have not included any grants, the loan interest, etc., then why is buying EC better for upgrading purposes? It's about the size of the investment. You'll be putting in more equity through the EC compared to your BTO, even though the ROI is lower. Let's take a look at these examples in Punggol. Twin Waterfalls and Ecopolitan are ECs launched in 2012 and 2013 respectively, while Waterway Cascadia and Punggol Opal BTO launched in 2012. Twin Waterfalls and Ecopolitan are EC average is about 6% per year. So for example, if you purchase it at 800,000, 6% per year will be 48,000. While Punggol Opal and Waterway Cascadia are BTO launched at the average about 7% per year. For example, you purchase at 330,000, 7% work out to be 23,100 per year. Within the same 5-year period, you earn 240,000 versus 115.5 thousand. This can help to form up a big sum for your down payment for your next home. For EC sales launches, the launch info is handled by marketing agents appointed by the developers. You can drop your info in the link down below, and every month we will send you updates on any new EC and condo launches from all over Singapore. We also provide non-biased free EC and condo buying service where we come together to understand your needs and give you a financial breakdown, customized research report, and recommendations based on your needs and profile. Moving on, if you're single, same-sex couple, or a couple who don't intend to get married and under 35 of age, you can buy private properties like condo. Either that or your income is above 16,000 and you're eligible to buy HDB, BTO or EC. In Singapore, we have new launch condos, sub-sale, as well as resale condos. For condos, there are not as many restrictions. As long as you're above 21 of age, you can buy a private property. There's no MOP restriction, but there is seller stamp duty to prevent frequent flipping of properties. In terms of investment, new versus resale, I understand many of us have the idea that buying new is the best because you get a fresh brand new unit, you get to make money fast from selling upon TOP. It's true to a certain extent that you usually make a profit when you buy from the developer and sell at a higher price due to the TOP effect. People love new units to stay in, and they also save on the renovation costs, etc. However, there are also people who buy new launches and make a loss due to factors such as high entry price, the competition are more attractive, and due to inefficient layout, due to market movement, etc. Research have also shown that resale owners do make profits, and that's not including rental income. If you're looking for a condo as a forever home, it's really up to your own preference in terms of location, facing, etc. If you're looking for investment upside, you have to consider the entry price, the current nearby rental yield, competitive prices, any potential developments nearby that could boost your capital appreciation. Generally speaking, HDB is less volatile and more resilient during downturns. Take a look at the chart. For part 2, we'll be talking about financing and CPF as well as housing loans. So do take note, in Singapore our housing loans are to be within MSR and TDSR rules. HDB, DBSS and new EC are under MSR. Resale EC as well as condo is under TDSR. So basically, both of these rates limit the amount of mortgage that you can take. For example, MSR is 30%, TDSR is 55%. By taking TDSR, you'll be able to borrow more. The loans are based on valuation or purchase price, whichever is lower. For new units, they are usually sold at valuation, and the developers will find banks that support the prices. For resale units, the valuation for HDB units will be done by HDB, and the condos valuations will be done by the bank. And if you buy HDB flats, be it new or resale, you can take HDB loan or bank loan based on MSR rates. For new ECs, you can only take a bank loan based on MSR rates. If it's a resale EC, you can take a bank loan based on TDSR rates. For condos, you can take a bank loan based on TDSR rates. For type of loans, mainly there are two, HDB or bank. To apply for HDB loan, you need to get a HFE. The max loan tenure is 25 years. The interest rate is tagged to CPF OA interest rate plus 0.1%. To get a bank loan, go to a preferred bank or mortgage specialist to share more with you which bank loan packages are more suitable for your specific needs. Interest rates can be fixed or floating. However, for properties that are under construction, banks will offer floating rates only. Let's talk about loan to value limit. For HDB loan, the LTV is 80% and your down payment will be 20%. For bank loan, the LTV is 75%. Your down payment will be 25%, 5% of it will be in cash. You may be eligible for grants when you buy HDB and new EC. Resale grants have seen an increase totaling up to 190,000, so make sure to take a look and see if you're eligible. So you can use your CPF OA savings to pay for your down payments, stamp fees, monthly installment up to your CPF withdrawal limit. Do take a look how much CPF savings you can use for your property purchase. Do take note of CPF restrictions if you are buying a flat that does not last you until the age of 95. Moving forward, should I buy resale HDB flat or condo? Which makes the better home or investment? Depending on your personal preference as well as your needs and your financial situation. If you love the lifestyle and you're okay to commit, you can go for condo. If you prefer having more space, lower maintenance fees, and you want to enjoy housing grants and flexibility, it will be HDB flat. If you buy a condo, it will be quite hard for you to sell and move into a HDB resale if you want to due to the cooling measures. Unless you are above 55 of age, you can then sell it and buy a resale 4-room flat and smaller. Talking about financial situation, one of my clients wanted to go for HDB resale because they wanted more space to start their family. However, we found out because his wife has recently just became self-employed like him, and the banks didn't want to include his wife's income, and that turns out that his loan amount for HDB flat is very low, and HDB is unable to give them a HLE due to the income ceiling. So it turns out they wanted to buy a 600,000 resale flat, they have to cough up almost 200,000 cash. After doing the numbers, with the same amount of cash and CPF savings and the increased bank loan for condo, they were able to afford a 2-bedroom resale condo around 800,000. And after viewings and negotiations, we managed to secure a nice home for them under 800,000. Also, in terms of price appreciation, based on past data, condo is comparatively higher for the past 10 years, as average resale prices from 2013 to 2023, condos have a growth rate of 31% compared to HDB 18%. What type of housing are you looking for? New HDB, HDB resale, EC, condo? Let me know down below. Moving forward, for shopping tips and mortgage insurance. Buying a home is very personal, and make sure to talk it through with your partner if you're buying with them, and what are you roughly looking out for. Some people prefer to stay close to their workplace, or to their family, to school, depending on condition as well as renovation budget. Do also understand the timeline that you guys are working on and plan accordingly. See whether are you guys willing to give any extension. If you give extension, it will mean that you will get your keys even later. You can also discuss whether you guys need a mortgage insurance or not. Buying a HDB home protection scheme will be compulsory. Though if you intend to upgrade to a condo very soon, you may want to consider getting a private mortgage insurance, as the HDB home protection scheme cannot port over to the new home. And do contact these guys to find out more. Buying under single owner or joint tenancy. So for single owner, one occupier, there won't be any ABSD for your occupier because legally they don't own the house, so their property count is still 0. However, the cons is that legally it's still one owner. So touch wood, if anything goes wrong, the occupier may be on the losing end, even though the occupier may have been paying cash all the while. For joint tenancy, this is usually the path that people choose. You want to split your shares, you can go for tenancy in common, and make sure you discuss it through properly. You can actually whale out the shares. So I hope this video helps in your home buying journey. Please like and subscribe. Thank you for watching.